One thing I used a lot as I was approaching financial independence, and even now that I'm financially independent, is this retirement nest egg calculator. It kind of gives me these what if scenarios, like can I retire, and which I did, but now, how sustainable is that? Am I, able to live to be over 100, maybe over 150 years? And I'm going to show you this calculator and how to use it. It's very easy to find, and I think you'll really like it. Coming up on Investing Education with me, Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting to you, go ahead and hit that subscribe button. All right, I found this retirement calculator, this nest egg calculator that I really like because it's so easy to use. So many of these calculators, they seem to have you input like 1,000 different data points, and it's just a real pain in the butt, right? Where this is just some easy sliding stuff. That's really easy. So let's take a look at that. All right, I'm over at retirementplans.vanguard.com. I'll have the link in the description, but if you just Google search Retirement Nest Egg Calculator Vanguard, you'll find it. Now, Vanguard, they're famous, of course, for their S&P 500 fund and their other mutual funds and ETFs. So, they're a big mutual fund company. So the Retirement Nest Egg Calculator is super easy to use. You basically use these little sliding things to change, your different criteria. So let's go ahead and use an example of this. So I'm going to go down here and I'm going to say, all right, how many years should your savings last? So this is once you're retired. So for like somebody like, maybe a traditional retirement, let's say retiring around 67, they might put in like 30 years to get them to 97, or maybe 35 to get them over 100 years. But let's say you want to retire early, right? So let's say we're going to put in 45 years, right? So let's say you're retiring around 55, maybe a little bit earlier. So real aggressive. Let's see if we can make this happen. Because in the bottom, it's going to show you your percentage or your chances of this happening based on the criteria put in. All right. So how much you got saved today? So, you can say I've got a little bit of money saved, maybe I got 210,000, or maybe I got 0 or 30,000, all the way up to, multi-millions, 7 million, whatever. But let's say somebody at 45, let's say you're doing good and you're already at $1 million. Well, let's not do that. Let's do 750,000. All right, so you're doing good. You're 45, you got $750,000 invested, that's your savings balance or your investing balance. And then I'll look at, well, how much do you spend each year, right? So you can, of course, put that up or down. So now we're going to look at your spending. And again, you want to play around with this and have fun with it. The link, again, is in the description. So let's say you spend, 85,000 a year, right? So, right now, that would be 11% of your savings would be 85,000, right? So this is more like if you've already retired. So I use this for like what ifs type situations, like could I retire? Well, that's not looking pretty good at 11% of our savings, but let's see what it says for us. So let's say now you want to just, and then after that, it'll show you how long your savings last. So one more criteria to put in here. So we're going to say, well, what percentage of your investments are in stocks, bonds, or cash? If you've got some things like crypto, that might be a little more risky, put that in stocks because they don't have a separate crypto one. Though crypto can be a little bit more riskier than stocks, and a little less, long-term proven as far as being over through the long term. If you have something that's a little more safe-oriented, then put in bonds or cash for the simple calculation. But let's say we're traditional and we put like, let's say 80%, a real common one is like 75 or 80% in stocks. So let's say and then, some in bonds and some in cash. So let's say we're at, 75% stocks, 20% bonds, 5% cash. Still a growth-oriented, oriented portfolio. Not 100% stocks, but we're looking to grow this money here. We're looking to grow this still, right? So if we ran this simulation, again, this would be the idea that I'm retired. Could I retire today? Might be a good question to ask with this. If I run the simulation, say, could I retire today with 85,000 expenses, 150,000 in the bank, but I want to last 45 years with this portfolio? What are my chances that'll last, right? And it's pretty small. And you can kind of see the graph, like the first 5 years you're doing fine, but over time you can see it gets down to a 3% chance. You want this number to be above like 90% or higher, right? Like 3% is like, oh, okay, I guess I can't retire now, right? 3% chance, that's not a good chance. But you can now start adjusting stuff. Well, let's say I only live 40 years, right? What are my chances there? And let's say my expenses, I can cut those down. Let's say I'm going down to 75,000, still pretty high. 10%. Remember, there's like the 4% rule that says you can spend about 4% of your income. And let's say I waited, these 5 years and my investments grew to 950. All right, now I've got quite a bit of money, right? I'll leave my allocation the same and we were at 3% return. Let's see where we're at right now. All right, we got that up to 26%, right? So still pretty low. So you can see how you want to play with these things to to make something, that's a little bit more of a strong estimate. By the way, Vanguard's using like 30 plus years of historical returns on the stock market, bonds, and cash, and running a Monte Carlo simulation, which means there's running tens of thousands of simulations to come up with these numbers. So it's a really kind of a good directional thing, more so than just kind of using just raw averages. But let's say okay, well, I'll retire at 67, so I only need 30 years, right? Let's say you're approaching that, or that's your goal. Maybe that's your goal. So we're going to wait. We're going to go to 67, and maybe that'll take us to 97 as far as our age life expectancy. Again, if you have maybe a family history, you might have a shorter life expectancy, you can adjust that down. And let's say we were just great. We saved 1.3 million, and since we're looking at retirement, maybe it'll be a little less as far as expenses. Let's bring that down to, maybe 55,000 expenses, right? So we got 1.3 million in the bank, 55,000 expenses lasting 30 years. Let's run the simulation. And then, okay, now we're up at 87%, right? See, so just how those changes, and then you can start, adjusting those a little bit more. Maybe I bring it down here, 100,000. What does that do? I was at 87, now I'm at 83. What if, and this is where I do a lot, was, well, what if I change my asset allocation? What if I went a little more aggressive on stocks? Let's say I went up to 80% stocks. Would that make a big difference? Stocks can help you over the long term. Didn't make much of a difference, right? I'm still at that 83%. Whereas, let's say I was something for a little bit longer time. Let's say I'm going at 40 years, and that's going to be a lower number because I'm now 40 years. I'm at 76%. But if I reduce my stocks to, let's say, 20%, and what would that do for the 40 years? And I'm going to rerun that simulation. That's going to go way down. See, it just won't last. It just won't last between inflation and all that. So you can see, basically at the link here, Retirement Nest Egg Calculator at Vanguard, it's a very easy tool. Use your numbers and play all these what-if situations to see, if it'll work for you and see if you're on track and what adjustments you might make. Okay, so check out the homepage, see all the other types of videos I have. It's all in the description or in the links below. Don't forget to subscribe, and don't forget to go play with that Retirement Nest Egg Calculator and have some fun with it, and adjust based on things that you realistically can do, and see if that helps you to be successful as you reach your goal of hopefully financial independence or retirement, whatever you call it, having success along that way.